Troy Muljat, thank you for joining me today on the Pivot series, the Building Bellingham Podcast. How are you? How are you doing?
I'm doing great. Yeah. You?
I'm doing great. I am very, very ready to get back to my real office, as I call it. Are you working out of your home office there?
Yeah, I work out of both. I have 3 offices, so this is the home office, so I'm here today. Yeah.
So which one's the Bat Cave?
The Bat Cave. This is probably the Bat Cave. So this is where a lot of the thinking gets done and some of the internal stuff. But yeah, we have our main Muljat Group office and then our management office as well, Landmark. So yeah, I hop from office to office.
Do you find a sense of constant having the ability to just change your environment a little bit, not get too stuck in one environment?
Yeah. I think you have to pivot. You have to be adaptable, and so. I always joke that I have my laptop and I'm going from conference room to conference room. So
yeah, just hopping around.
Yeah.
Well, what's going on in your world? Tell us a little bit more about who you are. A lot of people do know who you are, but for those who don't know who you are, tell us a little bit more about who you are and what you do in Bellingham, how you're tied to Bellingham.
Gosh, Bellingham, geez. Born and raised in Bellingham, 3rd generation. Grew up in a commercial fishing family, so that was the industry for years. I learned commercial fishing from my grandfather. My dad, Franks, founded the Muljat Group in '88. He was a broker and owner of Kelstrup Realtors. Probably very few people on the call remember that, but the old Kelstrup Realtor days. He was an owner there, started the Muljat Group, and then I bought that from dear old mom and dad here about 3 years ago, and really got into real estate 30 years ago as a commercial appraiser. So I did not do residential appraisal, got right into commercial appraisal in Seattle, did that, and then moved back to Bellingham in '95, and commercial appraisal, brokerage, development, investing, everything real estate.
Yeah, absolutely. So you started down in Seattle in obviously a larger area, growing at a much more rapid rate. What drew you to commercial appraisals versus jumping right into real estate as it was?
Oh, you want the truth, or do you want me just to tell you that it's the softball answer? So,
I'd like to hear both and then compare them.
Okay. Probably the truth is I probably had a chip on my shoulder, and dad was doing residential real estate, and that was silly business. So I wanted to do commercial. So I got into commercial appraisal and knew some people that were doing appraisal, and I found that very fascinating. And so you have to apprentice for someone for 3 years before you get licensed. So it's a little different, a little longer period than a brokerage license. And did that, and then you're really on your own. And so that was very attractive to me. I think the commercial investment market, and then I was thrown into valuing $5, $10, $20, $50 million properties at a very young age, numbers and digits, and a lot of Excel spreadsheets.
Yeah, I love Excel. So I think it's a lifesaver, isn't it?
Yeah, it is. Yeah. You can run your life in Excel.
Yeah, you actually can. And if anyone wants to know how to run your life in Excel, you can message either one of us on how to do that.
Yeah, absolutely.
So how important was that foundation for you going into the world of brokerage and ownership and being a leader for agents and development, getting to know numbers better than anybody? How important was that as a foundation?
Oh, gosh. At the time, I just was, I didn't know how important it was, but today, when I look back on it, absolutely can't even put a value on it because it was so important, the foundation that gave me. And I really learned at an early age how bankers financed investment real estate. And so and the job of the appraiser is to tell them what the value is of that property. So on a commercial appraisal, you're really doing three approaches. You're looking at the income. What does the property generate from an income standpoint? What's the debt coverage ratio? How are they stress testing this? You're looking at how the banks are seeing different things, but you're looking at what the potential gross income is of an investment property, what the actual is, and you're forecasting and looking in the past, looking at the current, and looking at the future to set a value. You do a sales approach, which is looking at comparable sales on a per square foot, per unit basis. And then you're doing a cost approach based on building it brand new and depreciating it. So that foundation was just super crucial for me, not knowing it at the time, but being thrown into discounted cash flow analysis and valuing large portfolios. They were sending me all over the state of Washington to value very large properties, well over my teeny little salary and net worth at the time. It was pretty cool. So
yeah, and for someone like you, you're in the position that you're in right now because of the hard work and the diligence that you have applied to your world, right? For someone that, like, at a young age, you're thrown into this, maybe you're evaluating a $50 million building, and they go, hey, Troy, what do you think this is worth? And you go, I'm going to get back to you. How did you create that mindset around this? How did you just push forward and say, I'm going to figure this out?
Yeah, it's a great question. You learn the basics, and there is a lot of hard work. I think working for someone was always very difficult for me. And so that's the one job, the job that I did have, was working that. And at the time, it was only 2 years. I had to work for somebody to apprentice. So it was 2 years and 4 months, and then I was out of there. So I knew what I was doing, and I had a mindset to get in, get the research, get licensed, and then move on. And so really from that point, then your career really starts, because then you're on your own, and you're really, you've got to knock on doors. You've got to be able to have people call you, rely on you, create your own business, your model, and then start valuing things, and obviously know what you're doing. Appraisers and brokers, they're definitely different, because an appraiser has a mindset that's looking at the past, looking at historical sales, 6 months, 3 months, 3 years, 2 years, depends on the property type, the asset that you're valuing. Whereas a broker is optimistic, eternally optimistic. And so probably at times I was a little bipolar, because I had a little bit of both of me. So, yeah.
And how important is, so much of our job is expectation setting, and the more it's rooted in data, the more easy, it is for us to be the bearer of bad news. And I think being the bearer of bad news is sometimes has a stigma on it, but it's so important in our industry that we're setting proper expectations. How did you, especially coming up like from an early age with these people that are, multimillionaires that are selling these $50 million buildings or whatever it may be, how did you, what was that like for you to say, well, Mr. Billionaire, this building is not quite worth what you think it is, and here's the data?
Yeah, that was hard. And I've had people come in and say, this is my life. I need a value of X. There have been ethical challenges that have come up. There's no doubt. A lot of what we do, there's a buffer between the bank and the borrower. So the borrower is going to the lender, and typically you're dealing with a large bank or an appraisal department in a bank. And so they're dealing with you. So there is some protections that are there, more so today than when I started 30 years ago. And so, but yeah, there can be some of those issues, or there's times when you screw up. I've made an error, and it's been a 7-digit error on a spreadsheet, and whoops.
Spreadsheets don't lie.
Yeah,
they're unforgiving, aren't they?
Yeah, they can be. So you're not perfect, but that's the way it goes. That's the way it goes. You do the best you can. And appraisal is an opinion of value, and you reflect the market. You talked about sometimes you have to be the bearer of bad news, for brokers, for investors, for people out there. The market is what the market is. Yeah. Market's up, market's down, market's sideways, slow, it's fast. Market is what it is. There are always buyers and sellers, lenders. Market activity always occurs in any market.
So what I'm hearing from you is that you have to be the realist. You have to be rooted in data, but there is an eternal optimism that you have as a broker in the sense that there is always a market for a specific type of property at a specific time. There's always some way to sell it or purchase it.
Yeah. So, and when you're doing an actual appraisal for a lender per essentially the appraisal rules and regulations, you give an estimate of marketing time. And so you have to say, hey, this thing can sell, this property can sell in 1 month, 3 months, maybe it's 12 months, maybe it's 24 months. And so because marketing times are slower, so price is relative, and there are different types of values that you can give someone. There's a liquidation value. Hey, I've got to sell in marketing time for this type of property or 6 months. I need to sell in 30 days. What's that value? That value is different than if we maybe sat on the market and exposed it to the market for 6 months. So it's relative. In the single family housing market in general, that market has been pretty good, as you know, in the past. And so marketing times have been days, hours, minutes. So very different than, your typical investment property.
Absolutely. So you started out in the commercial appraising world, and then what brought you back up to Bellingham to dive into the business of, well, residential? You do obviously have Muljat commercial as well, but what spurred you to jump back into the business up here in Bellingham?
I always loved Bellingham. My wife, Heather, and I, we were engaged down in the Seattle area, and we had families here. So we wanted to come back and eventually raise a family here, and wanted to be a part of what Dad had built. And that was exciting to me, to be able to be doing appraisal, doing my own investment stuff, and my own commercial brokerage. I really enjoyed doing the commercial investment sales part of it. So I was doing both for many years, and then really more or less retired out of full-time appraisal more than a decade ago. And I've really just focused on investment sales and then our management company.
Yeah, absolutely. Tell me a little bit more about the management company. How did you get into property management? When did that all start with Landmark?
That's a great question. Had a client actually who I had sold several large investments to, and he had suggested we should buy or start a management company. And I said, sure, I'm all in. And we bought actually from Lori, Remax Property Management, and we knew that we could add in a variety of units into that business, and that it would be a profitable business. 5 years later, after losing a bunch of money trying to figure out how to run a property management business, we figured it out. And so, but it's been 20 years now, and it's been a very interesting, fascinating road. Learned a lot. We set out to really with a mission of doing excellence in property management, because no one loves their landlord. No one loves to pay rent, and paying rent, even obviously today, is a very highly stressful situation. Today is the first of the month. It's rent day for a lot of people. And so, and there's current stresses in that, but we set out to do it better. And we don't always meet that bar. I'll be honest. It's hard to provide excellence in a time when you are trying to represent landlords, trying to help tenants, and also to a certain extent represent tenants, help them find a place to live, and maximize profitability for landlords. And so it's a tricky, delicate balance, but we have enjoyed it, and we've grown, and it's been a very interesting ride.
It's something pretty important there. You can't please everyone. And I think that's important to anybody that's watching is, yes, you want to do your best to do right by everybody, but you can't please everybody. And I think that's something that we're probably seeing a lot of right now, not only in the real estate sales side, but on the the property management side. Tell me a little bit more, and we don't need to get too political and too deep. We can go as shallow or deep as you'd like. But what have you been seeing in the recent months as an effect of the COVID-19 economic ripple? with tenants, with landlords? What are you seeing?
Yeah, great question. There is stress out there. Every market's different. Obviously, we'll talk Bellingham, Whatcom County in general, but governor of the state of Washington made a proclamation and revised that proclamation. And essentially, that rule of evicting tenants or charging late fees or raising rent is deemed illegal until June 4th. And we actually fully anticipate that will get extended in some way, shape, or form or fashion, probably through the end of the year. And so that is the current environment that we're in. That said, rent collection, the numbers we're seeing, statewide, roughly 92% of renters on the residential side have paid their rent. There's a fair amount of people asking for concessions, asking for rent relief in some way, shape, or form. Our numbers locally are a little bit higher than that. And then rent collection as of today, we have collected about 2/3 of the residential rents already for May. Granted, it's still early. A lot of people pay between the 1st and the 5th. But again, if there's a tenant out there that can't pay their rent, there's really no consequences today. And again, evicting tenants obviously isn't a solution. Working with tenants to help them stay in their homes, their units, and working through them is really done on a property by property, landlord by landlord basis.
So it sounds like, first of all, big shout out to Whatcom County for always being ahead of the curve there on a lot of these things. And the second piece is really, it sounds like even given the fact that people won't be evicted and have the forgiveness of paying late, people are still paying on time. So there's still that good faith of, they see it as a two-way street where they're being provided a home to live and the landlord sees it as an opportunity for it's their income property. So there's a good relationship is what you're seeing overall.
Yeah, there is. I mean, there's tension. We're hearing lots of stories on all aspects and all sides. And landlords have options for them. And again, I think after we get through the May rent collection time and we see where we're at and we see, what new laws and extensions of the governor's mandates are extended, if any, and what those look like, we'll just take things on a case-by-case situation. I think you've got people on both sides that are looking at worst case scenarios. Commercially, now when we talk commercially, we talk retail, office, industrial. That's a different story. You're seeing those numbers, those rent collections are lower. So we definitely are seeing that affect specifically the retail sides for obvious reasons. A lot of business owners can't be open. And so those numbers are down. But again, still, I would say still reasonable. And it just depends on the business owner and what they can and can't do. And so it's a unique time, really a unique time.
Yeah. And you work with a lot of, you said commercial investors and obviously residential investors, but probably on a larger scale as well. What opportunities are you seeing and what opportunities are others that you're working with seeing in this situation, this kind of this chaos, right?
Yeah, they're starting to emerge, and I think we have to wait and see a little bit more. A lot of investors are in a kind of a hold period where they want to make sure that certain tenants are paying, and so the investors I'm talking to are. This looks interesting. Are they paying their rent? And so they're kind of waiting for a couple of months. Banking is, for obvious reasons, a bit bottlenecked due to all the SBA, PPP loans, EDIL loans, and a variety of things. So bankers are working really hard right now in a variety of ways to help issue out some of the CARES Act dollars that have been issued. And so normal loans are taking a little bit longer of a period, and they're under different stress because banks are trying to figure out which side's up to a certain extent as well. So people are looking for opportunities. What I predict we'll see is that spread between interest rates and cap rates are going to widen. And that's going to provide for potentially more opportunity, more cash flow. I mean, cap rate is essentially a level of risk. And
Right.
so when you hear a 6 cap or a 7 cap or an 8 cap, that's basically your rate of return if you paid cash for the property. So it is a level of risk. So the higher the cap rate, the lower the price, and vice versa. Lower the cap rate, higher the price. So people are projecting that they're going to see a little bit of upward pressure on cap rates. But in this rate environment where, the 10-year treasury, which everybody indicates kind of they benchmark things on the 10-year treasury, and that rate has obviously fallen below 1%, and it's hovering between 0.5% and 0.75%. We are as close to zero as we've ever been. So those spreads and that level of risk and that potential cash flow is potentially not really greater than ever today. So there are some opportunities.
So, and that's when you say cap rate, that's just capitalization rate, meaning the return on cash on cash return on the amount of money that you pay for a commercial building, a residential building.
Yeah, it's not the cash on cash return. The cash on cash return is exactly what we what we said, and that depends. It could be if you paid cash for the property. So, but most people, good 3/4 of people get some type of debt. They get leverage on their property, and so with leverage, then you would factor out your debt service, and then your cash flow, and then you look at your cash on cash return based on what you put into the property. Cap rate is really that indicator, and it's just, again, if we paid cash for a property. Again, if I needed a 10 cap and I was going to buy something for $100,000 for simple math, I'd have to get 10 grand a year. It's an annual rate of return. If I only needed a 6 cap on that $100,000 investment, I would only need $6,000 a year. Just divide one into the other. So then once you take leverage into account, and obviously with an interest rate below a cap rate, there's positive leverage. So ideally that rate of return or that cash on cash return could go even higher, 8%, 9, 10, 12, double digits. And then you factor in principal reduction and the number goes even higher.
Do you see a lot of misrepresentation of cap rates?
Unfortunately, yes.
Yeah. True cap rates is what you're talking about. Yeah.
True cap rates. Yeah.
Let's talk a little bit about brand. One thing I admire about you and what you and Frank and your family have built is such an amazing local brand. I see it everywhere. I see your signs everywhere. I see, your name everywhere. And one of the things about that's so important is as we shift into, as we go into an economic shift, brand becomes more and more important. How important have you found it over, the previous recession? I'm not saying this is a recession, but there could be a short, hard-hitting result of this. How important is it for you to have that local relationship with our community here and that brand?
It's super important. Brand is a huge part of your business, as you know, as many others know. And so, family-based, local, independent, all are things that are really important to our brokers and the people that have been with us for a long time. And so reinforcing the brand, making sure that people understand who we are and what we stand for is really, really important. And obviously when people are looking for answers, they need information. We're trying to be out there in front of that and give people that information. So brand's key.
It is the key. Absolutely. And for you as a leader, I mean, you've got Keena Brashear, who's your designated broker. You've got other leaders within your company. How has it been for you leading the ship, Muljat ship, through this storm where we, initially were not considered to be essential on a residential and commercial, the sectors there. How did you lead people through that chaos? I mean, how many agents do you have right now that are working for all the different Muljat locations?
Yeah, about 100 agents total. So yeah, it's leadership is key as well. Just as key to brand, and so how you provide a true leader in a time of chaos sounds different than the noise. And so someone who's calm, who doesn't necessarily have all the answer, who puts the people first, and then adapts and reacts quickly is important. So uh, Zoom was not a new thing to me. We've been using Zoom and video conferencing for years, and a variety of other aspects of our business. And then teaching and getting people up to speed was important. And then leading our staff and communicating and making sure you're in touch with people, important. You mentioned Kina. Oh gosh, she's a big blessing. There's no doubt. I couldn't do it without key people, and Kina is clearly a key person, the key person at the Muljat Group.
So what you're saying is, as a leader, also recognizing that you can't do it all, and you have to surround yourself with people personally and professionally that are maybe better than you at some things, or want to do things that you don't want to do, or whatever it may be. How important is who you surround yourself with in a time like this?
Well, that goes back to John Maxwell principle, who is, one of my mentors. And, it's the law of that inner circle. You're only as good as those 5 people that you surround yourself with the most. And so I think that's very important, is who you surround yourself with, and then really making sure that those leaders they're smarter than you in certain areas, or a variety of areas, and being able to check your ego at the door. That wasn't always easy for me. I always thought that I knew everything and put everything on my back, and Troy could do it. And sometimes you burn out working a little too much, and putting everything on your shoulders. I probably still struggle with that. Kina and Megan and others can tell you that more than I can. But knowing who, letting leaders fly and run is really important. And speaking into them, training them, educating them.
Yeah. So finding that balance between, because you have to have some level of ego to do something differently than other people. I mean, you have to be like, well, what I'm doing is different and more beneficial than whatever it may be. You have to have that confidence, but then also you're talking about kind of gut checking yourself and saying, all right, hold on a second. This person, you need to empower this person, have some humility to let that person do this. And so you're saying being a leader is not just taking it all on yourself and saying, I can do everything myself. It's all about delegating and finding the right people, right?
Yeah, delegating and perspective too. I have really unique perspective. Almost 6 years ago, I almost died. I wrote my final letter, Leo, to my wife and kids. I meant it. I had a super rare cancer, and I was prepared. I was prepared to go, and I'm, thankful to God that I'm still here. I'm on bonus time. So that gives you, when you've written your final letter and you've meant it, and you're on the other side of that, it does give you a really unique perspective to be able to lead in a time of crisis, to offer unique perspective into other people's life. And other leaders that work with me or that I know have had similar situations, life and death situations, or really unique situations in their lives. And so that trials, you got to welcome trials and tribulations, because they do make you stronger. It may be difficult when you're going through it, but being on the other side, wow, pretty cool.
Focusing on the little things, right? The little things with life. And as our parents would call it, every parent tells their kid character building is what you're doing. So is that what you're referring to? Some character building?
That's definitely character building. Yeah.
Troy, what's for you when there's, you've got so much going on a day-to-day basis. I mean, everyone does, and it's all relative. Some of the things you're working on may be bigger in your world than others, and smaller, and whatever it may be. What's your constant? What's the one thing you can go back to as a person and say, wow, today really sucked. I'm going to go back to this thing, whether like, is it fishing? Is it hiking? Is it just being with your family? What's most important to you that you can go back to?
Ooh, that's a good one. That's a tough one. Sometimes it varies day to day, but I mean, my faith in my family is clearly the center of my life, and so that's something. No matter where I go or what I do or how entrenched I am, is something that I always come back to. Feel very, very fortunate to be nearing my 25th year of marriage to Heather and 6 children.
Wow.
So yeah, I know, it's crazy. It's absolutely crazy. And then, yeah, my faith, very, very important to me, but I do love fishing. I am a boater, and I have a boat, and I do love to fish. And so, that is a wonderful escape for me. And I probably don't do enough of that, but yeah.
Well, I think every business owner or entrepreneur can probably say they don't do that thing that brings them back to their center enough. Yeah. What advice would you give somebody that's, maybe in their first couple of years of business, that's now, or maybe they just started up their business, and then all of a sudden, boom, there's COVID, and boom, there's the economic ripple, which may be larger than the health ripple, right?
Yeah. Yeah.
What advice would you have for that?
I came into the market in 92 when it was, there was a recession, and I didn't know any better. And so I just put my head down, and I got up every day, and I got up before others. I was a first guy into the office type of person, and I just did the hard work. I got up, I did what people told me or what others had trained me to do, and I did it. I think where you see people struggling sometimes is they've got recipes, and you've got great leadership above you. Ben is a good friend of mine, and he has a lot of great information. We've been business partners before, and so people sometimes just don't do $1 million plan that's right in front of them. And so getting up, getting into your routine, making your calls, doing the hard work that you need to do, and being able to be a little bit vulnerable and taking, big time action, taking massive action in their lives, really going after it. So that is really important.
Yeah. Well, tell me, maybe not down to the detail of which way you tie your shoes, but what is your daily habit? What is the thing that you get up and do every day?
Yeah, I'm an early guy. I was up at 4:45 today. So I spent some time, a little bit of time reading. I spent some time meditating, and then I'm into my action plan. So I know what I need to do and accomplish. I revisit that. If I'm looking at numbers, preparing for the day, making sure that the people in my network and my staff and my other leaders, I'm prepared if I need to do some training or work with them. I'm ready to go. And so by 7:30, 8 o'clock, the day is more than planned, more than ready to go. And I've had my cup of coffee, my fruit, my breakfast, and I'm rolling. So getting up early is key for me. By early afternoon, my day can be done. And I've, for the last 5-6 years, I have pretty well been in that routine very consistently, where my day could be done by 3 o'clock. And then I'm home seeing my family, my kids, and I'm into that mode. Yeah, I do pull up the email. I do pull up the laptop and the Excel spreadsheet maybe after dinner and in the evening as well. So,
is it the vacation planning Excel spreadsheet, or is it the business spreadsheet, or one of the other hundreds of spreadsheets?
All of the above. All of the above. Yeah.
Maybe if I put something into this cell, it'll make that cell do this, and that cell, that's the best part.
Yeah. I train too. I have a home gym, and I hired a personal trainer. I had made it a goal of mine a couple of years ago to do the recreational triathlon at Lake Padden. And during my surgery, I had part of my spine removed. And so
Wow.
I had to learn how to walk again. And so doing the teeny little rec triathlon was a goal of mine, and I set out to do it. I told no one I was doing it until the day of. So training for that was really key for me, and hard for me to do that, but also still important today. Yeah, to keep up. Yeah.
You sound like a guy that you set your mind to something, you just continue forward with it. I hear a lot people setting these big goals, and there's nothing wrong with setting big goals, but setting big goals with a plan of action to get there. How important for somebody that's got, maybe there's a business owner out there that's an artist, but may not have the operational side of their business dialed in. How important would it be for someone like that to get a coach on how to really take the steps every day to hack away at that?
I mean, you've got to have one or two or five coaches. You've got to have multiple people speaking into your lives. So I am a huge believer in coaching, mentorship, networking with people. I just think it's just essential. I've had real estate coaches, even to this day, a real estate coach, leadership group that I've been a part of for multiple years. People that I network with. I'll go in and out of phases, and do a variety of different things, whether it's investing in one particular trainer for a year or two and then switching to another group. Very, very important to be learning those skills. We all have God-given gifts, personality traits, our disc test, so to speak. I'm a 99D. I'm a driver. I don't have a lot of S. I don't have a lot of C. Details are not my forte. So I had to learn really how to do certain details and structure myself. And so, unfortunately, it took me till my late 40s to figure some of those things. I'm still figuring them out. But details are tough. But having a coach, a mentor, someone speaking into your life and doing sometimes the hard work that you don't want to do is important.
Yeah, absolutely. And I know you do a market report here in Whatcom County, and I follow it. I love hearing what you have to say. Tell me a little bit more, and obviously no one has a crystal ball, and I'm not expecting that at all, so don't get me wrong. But I hear that so often. What's going on with the market? Well, let me tell you, it's all going like this. No, I'm just kidding. But great, that's a great party answer, by the way. It's going like this. It's on a downward trend. It's going to be terrible. Yeah. You should tell. No, but the question is, what do you foresee? COVID hit. Then there's obviously an economic ripple because people lost their jobs, or a lot of people were laid off or temporarily laid off. What do you see as a next ripple? What's the next ripple? Do you see a very short-term recession or depression, or what do you foresee happening as a result of all this?
That's a tough one. I have been listening to economic forecasts and a variety of, people that are professionals. I go every year to 3 or 4 different economic forecasts. And for the last 8-9 years since the Great Recession, I've heard economic people say interest rates are going up sky high, and all they've done is go down. So, they've been almost 100% wrong the last multiple years. So it's really hard to say, and even the experts can't get it right. But what I do know is, and we do a market report, and we looked at the last decade, some stats, and homes in Bellingham appreciated on average, from 2010 to 2019, 72%. In Whatcom County, 60% over that 10-year time frame. So, and that was through a pretty substantial recession. And that recession was led by real estate for the most part. Granted, it was some credit issues, CMBS, credit default swaps. We could talk about some of the intricacies and details there. But really, real estate was at a different spot. It was at, I would say, a more unhealthy spot. This time with COVID, real estate comes from a healthier spot from a standpoint of inventory, sales, and also percent home ownership that owns without any debt on it. That number was in the low 20s during the Great Recession. Today, it's in the high 20s. As far as what people own cash outright their home, and then inventory being at a very, very historic low level. Whole different reason of why that's there. And so, and I've been looking at inventory levels today, and clearly, you know this better than probably anyone, or as everyone else does. There aren't a lot of homes coming on the market. The spring time, where we count on close to 40% of our sales historically in about a 3-month time period, is running late. And it's overdue, and who knows if it's going to catch up. So that's a big key component. So sales are going to be down. You're hearing the chief economist for the National Association of Realtors saying sales are going to be down 17%, 20%, somewhere in that range. First, March, they were down 27% on the West Coast. And I think we will see sale activity obviously be under what we've seen in the past. Home prices, with this historic low interest rates time, I don't foresee prices dropping this year. Now, a lot of other factors could really play into whether that will play out further and beyond. And so you have to see inventory rise, and you'd have to really see additional financial motivation come into the market. Half of the city limits of Bellingham rents. So we obviously have a college town, so that does impact our housing stock a bit more. Home ownership rates are 62, 63%. Obviously, we're lower than that in the city proper. So that factors into things as well.
Yeah, absolutely. And it's interesting, you were talking about housing inventory, and there's probably a lot of realtors that will watch this, and they understand what that means. But housing inventory, or months of inventory, you're talking about the sales being down, but how important would that be for less inventory or less months of inventory for somebody that's like, is this my time to sell? Because I hear that all the time. What's your perspective? Would this be an opportune time to sell?
Yeah, that's a great question. And I think the answer in general is yes, it is a good time to sell, because there are buyers out there in the market. We're seeing transactions. I'm seeing a variety of things happen through all offices and throughout the county, and even in Skagit County and Island County, out in Seattle North. We're seeing activity. And so with inventory down, and with people and a lot of that inventory is, maybe there's some issues with some of that inventory, or it's been around for a while. Fresh inventory is selling, and if it's priced well and right, and by your local realtor, I think you're going to see good activity. So, people sell for a variety of reasons. Or have to sell, or don't want to sell. But if someone's been thinking about it, they should give it great consideration, because inventory is still way out of whack, and there is inventory needed. And even with sales down, whatever percent, pick your number, there are still buyers out there looking for homes today.
People still have to move. Absolutely.
Have to move. Yeah.
Yeah. So it's interesting, because you're someone who I look up to, and I know that you've very much diversified based, you've told everyone you've diversified how you've been a part of real estate, whether that's commercial or residential or ownership or whatever it may be. When Wes Herman was on the show, he was talking about his drive-through being his saving grace right now, right? Because people can't physically go in a store. What has been your drive-through for your business, you personally, or your realtors at Muljat Group? What's been that saving grace?
Oh, that's, it's different for everyone. I mean, for me, I think it is being fairly diversified. I made some financial decisions, based on, how I would, types of reserves that I would keep personally for my investment properties, for our development entity, for our management company, for every entity. And so I was prepared for anything. And granted, my view on life changed a lot, 6 years ago. So my risk tolerance level changed. And I was just content. Maybe I wasn't always content in my own life, constantly chasing something, looking for something that, maybe I didn't necessarily need. And so the thrill of the deal catches us all, and it probably caught me a little too much. And so you're chasing a little too much, and people that sometimes leverage themselves a little too far. So I made some of those decisions to not do that. And I think being diversified and having, more than what you would say in your 3 to 6 months in reserves available was important to me and my family and my businesses.
Well, first of all, I want to say thank you for sharing this. And I know that some of these questions it depends on the person, and sometimes it's circumstantial. So I appreciate you handling those with grace. And I did want to just ask you, for the people that are watching and the people that will watch this, what message would you like to give to our community, our business owners, our clients, our customers, all of the above, our Bellingham community?
Yeah, I mean, we all, I think, agree that we love our community. We love Whatcom County. We love Bellingham. I mean, I was born and raised here. We have so much at stake. And I think having faith in that things will work out is important. Hope is important. Working hard and keeping that work ethic during this time is important. Knowing that you may not have all the answers, or we as leaders don't have all the answers, and that's okay, and being content with what you have. There's just so many more important things in life. And, for me, again, my faith, my family, super important. And knowing what your center is. So whatever that is for that business person, being able to come back to that. It's okay to go into the pit of destruction, but with a hand firmly on that strong foundation, whatever that is, your center, and being able to come back in. So if you've got to go on a media fast, go on it. It's okay to just be still and just get back to your center. And so that said, there are business owners that are really struggling and having issues. And so looking for every resource that they can, surrounding themselves with people that can lift them up. And for other people that have the ability to go buy local and buy from those businesses, please do it. Whether it's gift cards, whether it's takeout every 3 nights or once a week with your favorite restaurant, support those local businesses. Buying local has never been more important than today.
Absolutely. Well, that was really well said. I really appreciate you taking the time today to join me on the Pivot series. Looking forward to at some point having you back on the full podcast when we're back able to go in the studio. Mm-hmm. And for those of you that would like to get in touch with Troy for any reason that we've discussed today, you can find him at troymuljat.com, and that's the commercial real estate and all about everything Troy on there. And then you can find him on Facebook at the Muljat Group or Troy Muljat, and Instagram at Muljat Group or Landmark. Visit Landmark, I believe it is. All of that will be in the description below. Troy, I really appreciate you taking the time today to visit with me and talk about some vulnerable things and also some business things. So I appreciate your time.
Yeah, you're welcome. Thanks, Leo.